All right, good morning, everyone. It is 8:25 in the morning of September 30th, 2022, and this is my pre-market strategy session. So first, thanks for tuning in. Second, I'm starting on the Qs. I'm really pretty much concentrating on the Qs for right now, and the reason that I'm doing that is because generally speaking, I'm bearish, and the Qs don't have any companies in it that are really defensive at all. Whereas the SPY, the S&P, does have some defensive sectors in it. And if you hear that noise in the background, that's my son Henry having some fun with his toys. Wonderful little man he is. Okay, so the title of the video today is EOM Markups Not Likely. That means end of month markups are not likely. It's supposed to be markups are supposed to be illegal. It's supposed to be illegal to mark up, for traders and portfolio managers and so forth aren't supposed to do any of that kind of behavior. It's supposed to be illegal, but it still happens anyway. It's sort of like insider trading is supposed to be illegal, but it still happens anyway. So, and the reason that I think it's not likely is that there's so much anticipation for downward pressure on the stock market right now. I don't think that portfolio managers and so on fund managers, I don't think they're really feeling the pressure to outperform, any of the what are those things called? Any of the metrics. It's just most likely they're willing to accept, that prices are going down, and their customers, also the investors whose money they manage, are also willing to just kind of accept that prices are going down. Don't fight the Fed. So when the Fed is tightening, there's a high likelihood that there will be downward pressure on the stock market. Similarly, when the Fed is loosening, there's going to be, a wind to the back. There's going to be upward pressure on prices. So I don't think that we'll see on today's the last day, last trading day of the quarter, September 30th. And I just don't think that we're going to see end of month markups today. I think that there are going to be a lot of people who are willing to just let the market do what it's going to do. Now, with that said, we are up 0.44 on the Qs. We're up 0.44% in the pre-market. And generally speaking, I think that we're pretty much going to be range bound in here for a few days. Today, it really could break down today. There are a lot of people who might have long positions or long trades or who knows what, who don't want to be long over the weekend, given the propensity for bad news. 2 days of the possibility of 2 days of bad news coming around in conjunction with, not being able to trade those days. So Saturday and Sunday, who knows what is going to occur in the Baltic Sea, or who knows? I mean, with how crazy the news cycle is these days. So, I don't think that people are going to hang on to any kind of leveraged long positions over the weekend, and probably see those unwind today a bit. 271 yesterday. The level that I'm watching closely is 271.39 and 280. And I'm actually not going to do anything at either price until it gets confirmation. So if there's a move above, I want to see a retest and then a continuation move, and I'll trade that continuation move. With a move down below, I want to see a test of the move below 271.39 and then continuation to the downside to trade that. And that's going to be my strategy. And the blue line, it's going to be my strategy for today. And this blue line right here represents when the first tech companies start to report. So this is somewhat of a deadline. I expect to see drastic movement around October 11th, I expect to see a significant move up or a significant move down by that point in time. So any kind of moves between now and then will probably be a bit premature. Still tradable, still possibly worth a trade, but not something that I'd have a high degree of confidence in for a swing trade. I've unwound the positions that I started back here. Oops. I started back here. Let me get rid of that text. Get rid of that. On the 26th of August, and then I opened up some more shorts here on the 13th of September. And so now I've spent the past 3 days in this range right here, unwinding those short positions. So for me right now, I think it's time for me to just kind of take a breather and let the market begin to develop whatever it's going to develop into. Well, it's going to be the upside or the downside. And I suppose the closer we get to the October the 11th, I'll probably start averaging into something within a couple of days before October 11th. So the VIX is still extremely elevated. It's in the 30s. That is considered, anytime the VIX is over 30, the stock market is considered uninvestable. So, you don't want to be buying in the 30s, generally speaking. So, yeah, and it's looking to me, I mean, the way the VIX is really kind of stacking up here, there's going to be an upside breakout on the VIX, and there's definitely a lot of pain to come. Once the VIX starts going into the 40s and 50s, markets are crashing. They're crashing. So I think that's on the horizon, the near horizon. Here's the yield curve. The yield curve is still inverted by 465. This is the 10s minus the 2s, and it's inverted by 461 basis points at the moment. And it's something that I always point out, and that is that I'm going to go to the monthly here. The yield curve can be inverted for quite some time before the crash happens. So here, for example, in 2007, the crash started in June of 2007, and the yield curve was inverted for about 18 months prior to the crash. So here, and just kind of flash forward here we are. Yield curve has been inverted, we'll call it, for 3 months. And so there's quite possibly another, 9 to 15 months left of the yield curve being inverted before it starts to normalize again and the crash starts to occur, which I think is going to be really bad. I mean, if this is any measure, we've got, a few months here. Let's go ahead and put it on the monthly. Let's see. Call it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months of a downturn, and that is preceding the normalization of the yield curve. So if we're already in a downturn and then the yield curve starts to normalize again, we are headed much further down. Things really could get quite ugly in the next 9 to 15 months. Here's the SPY. I have these support levels on the SPY. I've forgotten to look at these. They're roughly the same thing as what you get on the Qs, really. Let me put this back on the daily. And so, basically 271.39. I have a feeling that today, if it starts selling off, I imagine it's going to sell off at the open. It's probably going to slice right through 271.39. And I imagine that's probably going to keep going. What I'd rather see, of course, is what I described earlier, is that a plunge below, retest, and then continuation to the downside. I just get the funny feeling, and I can't really go by feelings. I have to see my setup, but I get the feeling there's going to be just a sharp downturn to end the month here. So let's see, and that's pretty much what I've got. You know, just everything. It's extremely bearish. So, until I get my setup though, I'm not doing anything. All right, everybody. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell. And I'll see you on Monday morning's strategy session. Have a great weekend, everyone. I am